Hey, welcome to Everything Money. We're glad you joined us. I'm here with Paul today. No Mo for this video because we're not talking about trading today, but we're glad you stopped by. The gist of our channel for the past 2.5 years, Paul, is just been following you, your mindset, and really your mindset about value investing, which was a new term to me. I had been fiddling around with stocks for a decade, not really knowing what I was doing. If you're in this position as well, you might be out there right now saying, what is going on? Like, you see the crypto craziness, you see the market craziness, but if you're confused, you might have found the right channel, which is Everything Money, and your handsome host, which is me, Seth. But in general, what we're talking about today is, what is value investing? What does this mean? How does this pertain to you? And if you watch a bunch of our shows, hopefully you'll start getting the gist. But we'll start now, Paul. Why, how, who, what, where did you become a value investor? Why are you drawn to it, and what is it?
Okay, so Warren Buffett is famous for saying that he thinks these two words are redundant. He personally believes, how is it possible to invest and not do it with value? Because to him, and like his mentor Ben Graham says, investing is about buying something with a very limited potential of capital loss. And that's a very 500-foot view. It's not the real definition, but it's basically what he's talking about.
Yep.
So a lot of people sit there and say, I invested in Bitcoin.
Yes.
I don't consider that investing.
You've said this many times.
And even buying a company like Tesla, even though Tesla generates profit, I don't consider that investing. And the reason being is the multiples being paid for these companies are so high that the chance of it continuing to go up is very limited, more likely to go down. And if it does go down, you're not getting a good return on your capital from the business's profit and balance sheet to give you good reliance on the company in general, okay?
So it's possible, but just not probable in your mind for a lot of cases.
Correct. Now, things can appear to be value investing, as our friend Kathy Wood has said in the past. If Tesla grows at 92% a year, it's a value investment right now. And she is correct. I mean, I didn't know the numbers, but yeah, if a company has potential to grow 100% a year for 50 years, then what would you pay for that company? I mean, it'd be the biggest company in the world by 100 times. So would you pay $1 trillion? Of course you would. But with value investing, the actual definition is buying an investment, buying a company, buying an asset for less than its intrinsic value. And intrinsic value is the value you give it as you say, hey, I think this asset is worth this. And your goal is to buy it for less. I've said before that value investing is buying $1 for 50 cents.
Yeah.
But I always struggled with this definition. I always struggled with how to describe it. And then the other day, I'm on Instagram and I'm sliding into DMs.
Yes, of course.
But in between sliding into DMs, I saw a Yahoo Finance post of a guy I really respect a lot named Howard Marks. Howard Marks is a debt investor in California. Brilliant man, value investor. I recommend you buy his books and read them. He's very philosophical about investing. Here is what he said, and I think to me, he didn't talk about value investing about this, but to me, this is what value investing's fundamental idea is. You ready? Value investing, in my opinion, it's not what you buy, it's what you pay. So
let me sink that in for a minute, because
yes.
You and I had an hour-long conversation. I called you last night because there's an acquaintance of mine around here that's selling a lot of really old magic cards, and he wanted $50,000 for these magic cards, which I'm really into, and I know I'm nerdy. Before you guys roast me in the comments.
Please stop.
And well, nerdy with magic cards. And so I instantly call you, Paul. What do you think about this deal? Is it worth it? Can we? What do you think? And this was your response: is it's not what I'm buying. I kept formulating the deal and replace magic cards with Pokemon, anything.
It doesn't matter what it could be. Pokemon, baseball cards, or companies, or real estate. It does not matter.
You're right, and you hit me with this. It's not what you're paying. It's
not what you're buying. It's what you're paying.
I was interested in what I'm buying and had no thought process about what am I paying and how does it go down. So keep going. How does this explain?
So you look at real estate. What do we always hear?
Location, location, location. Of course.
Okay, so to me, this is bad. You know why? Because over the years, what people are basically saying is here, this is all that matters. So to me, I hear that and go, I should pay whatever price I need for the best location. Okay, let's say the location is Park Avenue and Fifth Avenue. I don't even know those intersect. Who knows? I don't know. The number one location in New York City. And let's say it generates $10 million a year in profit. According to this, it's the number one location. So what price do you pay for this?
You tell me.
No, you tell me. If it's location, I'm justified paying and add zero after zero after zero. Because nowhere in here did you tell me how much price matters. But we can all agree, and this is what we do.
I see.
When people buy Teslas, all these companies, they say it's a great deal right here, and it's just going to go up and up and up, then never stop buying. And there's no price that makes it not worth it. Oh, well, there is okay, what's that price? The second you start talking about a price that's not worth it, then you're like, okay, then we do have to believe in fundamentals. We have to believe in some sort of metric that makes it worth it. At the end of the day, this is all that matters. It's not location, location, location. It is what are you buying, and more importantly, how much are you paying for that? So as an example, if you had the best location in the world, location A, and it generates $10 million a year in profit. Location B in Akron, Ohio, also generates $10 million a year in profit. This one, you got to pay $1 billion for, and this one, you get to pay $100 million.
Well, when you break it down, it seems so obvious.
And people would say, oh, it's an extreme. It's actually not an extreme, guys. I mean, yes, these numbers are extreme, but what actually happens is this. 300 million versus 200 million. And people would say, well, this is well worth it. Well, it is well worth it if this 10 million could grow at a much faster rate than this 10 million, which it could. But if you're assuming 4% versus 3.5%, it's probably not worth it, because this extra $100 million in cash flow, this extra $100 million in purchase price, you can use to go buy another piece of real estate similar to this. You can now buy $15 million worth of profit. It's all math. At the end of the day, the math is not going to lie. You put it in your analyzer, you sit there and do the math. At the end of the day, the value of any investment is the present value of all future cash flow based on whatever return you want. That's it. Now, I look at it going, look at real estate in California and Arizona. Went up like crazy. I remember my aunt lives in California. Before the real estate crash happened in 2007, 2008, she told me, she's like, you know what, things are getting a little crazy. I don't think we're going to get 15 to 20% growth. It'll probably be more like 7 or 8% growth a year for the rest of the time. Well, I went and did my research going back to 1960. California had never done 7 or 8% over long periods of time. It averaged about 5.6, 5.7% over long, maybe 6, when Ohio was doing 5%. So I look at that saying, wait a second. So she would make an assumption that never ever occurred into the positive side. I look at this going, this is a prime example of it's not what you buy, it's how much you pay. This is a very fundamental belief. It's like sitting there saying, guys, let me put it in basic terms, what I always tell people. Look at this iPhone. How much is this iPhone worth?
$1,000?
Is this the best iPhone out there?
Apparently, yeah, the newest and best. Sure.
Great. Pay $10,000 for it.
That's ridiculous.
But if it's about what you buy, you should pay whatever price you need. And of course, there's going to be comments below. That's not what it means. But that's what's happening in the world of investing. When we get enamored with a specific asset as opposed to what am I paying for that asset, there's an issue. Even in the world of rare art, there's still a level you have to sit there and pump the brakes and go, wait a second. They're not making any more Mona Lisas. That was available for sale. They're not making any more Mona Lisas. Does that mean you pay $100 trillion for it? Well, no. What is that number? That's the hard part. That's what makes investing difficult, is we don't know what that number is. It's much easier for me to value something that has a steady stream of cash flow. Because I can sit there and say, listen, I'm going to put it in my computer and say, if I believe the next 20 years of cash flow is going to look like this, what am I willing to pay today to get a 20% return, 15% return, 10% return? I don't know. But we have typically found, like, look at our real estate, Seth. We have class C+, B- properties at best, and we kill it. We make way more return than the people who are buying class A, even with class A going up in value much more. Why? We have the cash flow.
Yeah.
And there's just different philosophies. We also do a lot more work managing our properties than people have a class A property. We have a lot more issues with maintenance and capital expenditures, things like that. But at the end of the day, the returns are 30, 40, 50%.
What is the opposite of value investing?
Speculation.
What does that look like?
Speculation is like the greater fool theory. So speculation is I'm going to buy this, Bitcoin, on the hope that somebody else pays me more for it in the future. Give me an intrinsic value for Bitcoin. Nobody can.
By the way, what is your Bitcoin target price this today is?
$84 billion.
Okay. Yeah, mine was only 72 billion. I just
per coin though, right?
Yeah.
Of course. We have to be realistic.
Okay, keep going.
So that's the thing about speculation. Speculation is all about you're only going to make money on the asset going up in value with no fundamental reason why that's going to happen. It's the greater fool theory. I'm just hoping that somebody pays me more. And of course, all you Bitcoin, and Tesla fanboys will sit there and say, no, there's fundamentals to it. Okay, great. Then go with it. But at the end of the day, I look at Tesla. I mean, Seth, we've seen Tesla lately, haven't we? What has Tesla done lately?
It's all over the place, is it?
So Tesla, as of yesterday, was 606. And the last year, it hit a peak of, I think intraday peak was like $900 and some dollars. So I sit there and ask everybody who's a big fan of Tesla, if it's such a great company and it's going so well, when it falls 33%, are you putting more money into it? If you are, great, more power to you. You're being consistent. The difference is, what profit's it making? You're paying $582 billion for a company that last year generated $1 billion. So you're getting 1/4% return. 1/4% return in cash versus a company like Intel. Intel, you're buying for $230 billion, less than half, and you're getting net income of $19 billion.
So the comments below will say, Paul, is it's
18 times more.
It's silly to compare these two companies.
Of course it is.
And
but at the end of the day,
a dollar
of profit is the same no matter where it comes from. Yes. Does Tesla have more growth potential? Yes. Should you pay a premium for Tesla versus Intel? I would agree with that. The question is, are you willing to pay 2.5 times more to get 18 times more, to get a 1/18th the profit, 1/17th the profit? If the answer is yes, and like I said before, I have 8 companies upstairs. I would gladly sell shares to you in that company at the same valuation as Tesla all day long.
But those companies aren't as exciting and disruptive, Paul.
I have way more upside potential than Tesla does.
Okay.
I have way more upside potential than Tesla does, don't I? We're much smaller. If you think that a bigger company has more upside potential than a smaller one, you're also not understanding a fundamental of business, right?
So going back to the idea of investing, like, isn't this broken down just as similar as buy low, sell high, and that often isn't happening nowadays?
Well, I don't like the buy low, sell high idea, because just like everybody that talks about buy low, sell high is not understanding what that means. It's focusing too much on the stock price as opposed to the fundamental value and the price relative to the value. That's the problem I have. So we look at buy low, sell high. Guess what? This was probably still a decent price for Intel back then. $55, and it went lower. Now, a smart investor had been buying along the way because that's what I'm doing. I have Intel. I have some shares of them, and I can't wait for it to go to 40. I'm hoping it goes to 40. Will it go to 40? I don't know. But along the way, I'm going to be buying shares along the way. And a good investor doesn't get scared of a stock price going down, because to me, I am buying shares in a company at a much lower and lower value, and eventually the market will take care of it for me. With Tesla, the only way you're going to make money on your stock is the stock price going up. There is no fundamental reason behind the company to justify that valuation. They've got to go from $1 billion in profit to $30 billion in profit to justify their current valuation, assuming no more shares are issued.
It's not probable.
It's not probable. Is it possible? Of course. It is not probable, though.
And you like to follow the probabilities of the past 100 years.
Well, it's so funny. We talk about baseball. We talk about poker. We talk about blackjack. We talk about all these things, all things in life. And sure, everything is based on probabilities, right?
Yeah.
I leave my house every day, even though it's possible I get hit by a car the second I leave my house and die. Why do I do that? Because it's extremely not probable that happens.
Interesting.
And to me, the risk is worth the reward. Because I'd rather go out and live life on the 1 in a million shot that I leave my house and die. Okay, fine, I'll take that risk. But with investing, if you invest in 100 Teslas at these valuations, you're going to end up losing a lot of money.
So how do we, for the viewers at home, how do we start instilling this value investor mindset? And why is it, you think, the best play moving on with life?
Well, it's been proven that over long periods of time, value investing works better than any other form. I shouldn't say any other form than just the hype investing, things like that. Now, there are good like a guy like Jim Cramer made a lot of money doing day trading. I think he made like 26% after fees for like a 15-year period. I mean, insane numbers. But process is most important. If this kind of process speaks to you, I didn't realize I was a value investor until probably 05, 06. When I look back in high school and college and remember the things I was saying about investing, I had the value investing mindset. We look at a guy like Seth, who didn't believe this, but then we talk about things and Seth says, well, this, and then all of a sudden I'm like, well, I think Warren Buffett's wrong when he says you either get it or you don't. Seth's been around me for 2.5 years doing this show, and he's starting to go like, man, this is crazy. Why would people buy this investment? I'm like, okay, Seth's is starting to get it. Mm-hmm. So if this makes sense to you, watch more of our videos. Watch Sven Carlin. He's got great videos, SvenCarlin. He's got great videos about value investing. And every value investor is a little bit different. Fundamentally, they believe the same things, but their approach is going to be different. It's just, if it makes sense to you, the great thing about being a value investor is it's peace of mind. I love knowing that I'm not worried if the stock is going down. I'm actually liking it.
Yeah.
You know what I mean? I don't worry about that. Like, I don't worry about the market being 4,200 the S&P because I'm like, okay, well, this is not likely to continue. I just believe in cycles and I believe in history. And most value investors say it's never different and there are always cycles. What did I tell you last night on the phone? Every asset class goes through a cycle. No asset class going back hundreds and hundreds of years, you'll never find one asset class that always did the best. And that's why I don't like blanket statements like, oh, real estate's always the best investment over a long period of time. No, it's not. Stocks are always a great, no, it's not.
Right.
It all depends on what you're paying. And that's the fundamental belief. It's not what you're buying, it's what you're paying for that. That's the end of the day. How much you're paying for every dollar of revenue and profit and assets and liabilities in a company. It's all that looking together, as well as the future prospects of the business. A company with more prospects for future growth and higher probable prospects of future growth should sell for more than one that does not have that. But how much more? Unfortunately, we're in a time where paying whatever price is what works. And out there, the people who think I'm wrong are saying it's not whatever price. That's what you're doing. You are paying whatever price because you're not looking at the fundamentals of the business.
That's our take on value investing. If you like the software behind Paul, you can get access to this by being a Patreon member. The link's in the description below. Patreon, our Patreon community, Paul, is incredible. It's growing every single day. 2,800 members. It's blowing our mind. We love you. You know those patrons. I love you. And if you made it this far,
isn't it
congratulations.
incredible? 2,800 members. I was looking at it this morning going, how did we get to 28? I mean, we gained 750 this month alone.
It's bonkers. The communication they have, the discussions they have in the Patreon is incredible. You get access to this beautiful software, which costs a lot of money elsewhere.
And the great news is, the more patrons we get, the more like I tell Tim, we got to make this even better. And I just look at it going, it's a commitment to the people. I mean, it literally is like, yeah, we can't let these people down. I mean, look at we have dark mode here, guys. We have dark mode here.
People were asking of this for a long time.
And the other thing is we have market mode. So if you go in market mode, when the market's open, it's white. When it's closed, it's dark. It automatically switches. Yeah. That was, cool. Tim stole that idea from somebody, but Tim implemented it, which was great.
That's our take on value investing. If this speaks to you, it's going to take some time to learn. This is not like a flip the switch type thing, but for some people it can be. So yeah, tickle the thumbs up on the way out. Check out the Patreon, and thanks for following along. Thanks, guys. Appreciate it. Oh, we're giving away a Tesla. We're giving away a Tesla in just a few subscribers. So check out that Tesla. It's going to Patreon members. See you guys. Thanks.